Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, welcome to the week that was, the weekly podcast that sums up market movement and events from the past week and their implications on asset markets. I'm Castellino, the host for this week's podcast. Last week, markets witnessed a broad-based recovery. Nifty and Sensex rose 1.6% each. Broader markets also ended the week in green. This was driven by President Trump's positive comments on the India-US trade deal, reopening of the US economy, earnings recovery in Q2, and election-related optimism. Telecom led sectoral gains, supported by strong Q2 earnings and expectation of tariff hikes in some of the telecom companies next year. IT and pharma rallied on trade deal hopes and the US reopening, while defense-led momentum led to capital good index inching higher. Bond yields rose in the 3 and 5 year segment as anticipation of the trade deal with the US tampered expectations of further RBI rate cuts, while the 10-year G-Sec eased marginally by 2.8 basis points. Gold rallied 4% as central banks continued buying amid US uncertainty, though some consolidation followed early this week as the US economy reopened. The rupee declined marginally. October CPI inflation hit a record low of 0.25%, driven by food deflation and GST cuts across key categories like auto, electronics, clothing and food. Core inflation held steady at 4.4%, but excluding gold and silver, it moderated to 2.5%. This benign inflation backdrop, along with subdued nominal GDP growth, gives RBI room to cut rates by an additional 25 to 50 basis points. Year to date, Indian markets have underperformed global peers. While India is up 10%, global markets have rallied close to 18%. Foreign investors have pulled out nearly $30 billion from India since the September 2024 peaks, including $16 billion this year, which has weighed on Indian equity performance. India's valuation premium to EM and Asia ex-Japan, however, has cooled significantly from its peak. Further, Q2 earnings season has largely been in line with expectations. Current season indicates bottoming out of the earnings cycle. Earnings are expected to remain robust for FY26 and 27, with estimates being at 8 and 17% respectively. FPI flows are also beginning to stabilize after months of outflows, as October saw positive FPI flows. This, coupled with earnings recovery and cooling valuations, is likely to drive a reversal in India's underperformance. That's all for this week. Thank you for listening to our podcast, and if you found it useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.